Welcome back to Bazaar Morning Call. Well, yesterday we had a bit of a rough session, but today the GIFT Nifty is suggesting that we pull back closer on 50 points. The hope is we can build on from these levels. Amnish Aggarwal, Head of Research at Prabhudas Lilladher, joins us on the show. Hi, Amnish. Thanks so much for joining in, Amnish. I want to talk about one of the stocks actually which could be in focus and was down yesterday because it's part of the PSU basket, Coal India. The numbers do look good. The stock, even after the big rally that we've seen, is trading at around 8 times, and it has dividend yield of close to around 7%, 6 to 7%, depending on what dividend you're assuming. How would you approach the stock at around this 430 level?
Yeah, thank you, Nigel. Coal India, if you look at not only Coal India, I think many of these PSUs, they have seen a very sharp run-up in the past, say, 6 or so. Now, while the performance has been good, and given the fact that India has got a lot of still scope to increase the production of thermal power, we believe that the government focus will continue on increasing the production of the domestic coal, which will actually benefit Coal India. But having said that, the kind of rally which the stock has seen, say, in the past 6 months or so, I think there is a probability of the stock taking a pause, and the incremental returns from here will come at a very moderate rate. And I also don't rule out that the people who had entered the stock early in Coal India and in many of the PSUs, we don't rule out that some profit booking might emerge at this point of time.
Amnish, hi, good morning. What went so wrong with Bharat Forge yesterday, you think? I mean, of course, the management commentary was on the weaker side, but did it really warrant a 14% fall in the stock? And what do, investors do now with this one?
I think there were concerns that your volumes might be tepid going forward. And even I think in the domestic market, there was miss on the sales front. So that I think might be one of the reasons for the stock getting, you can say, a very sharp sort of a correction. But having said that, I think the company has, I think, conveyed that there is not likely to be any growth. That is number one. And secondly, if you look at, say, next couple of years projections, the stock is trading at around, say, 23, 24 times on our estimates of FY26, which if you look at historically for Bharat Forge is not on the expensive side. So given the kind of cut which the stock price had seen yesterday and the management commentary later, I don't see some bounce back in the stock happening today.
Okay, all right. Amnish, I also wanted to ask you about Hindalco. Novelis's numbers were pretty okay, and they're guiding for better times ahead. Novelis's numbers, the EBITDA per ton came in at around $500 per ton. For the next quarter, they say it goes to $525, and from there it goes to $600 per ton. So no worries on operational front. The problem is on that 600,000 ton unit that they're setting up in the United States, from an initial capex of around $2.5 billion, now they're talking about $4.1 billion. That's going to spook the street. What's your view on the stock?
The increase in the outlay for that plant is very significant, from $2.5 billion to 4.1. And basically, Hindalco, although Novelis is more on the value-added side of the product, but even then, your IRR of that project will definitely come down and is going to have hit on the stock price in the near term. In the long term, as far as volumes are concerned or other structural factors, they remain intact. But I think it is going to definitely have some impact because your cost increase is too steep from 2.5 to 4.1. It is more than 60% higher, which will definitely going to, you can say, impact the return ratios and all the parameters of that project.